Scotgold Resources is the UK's first fully commercialised gold producer. It recently reported that 2022 will be a year of growth, targeting gold production of something around 23,500 ounces per year, expected to be recorded by the first quarter of 2023. To back up its optimisation strategy, Scotgold has today announced a new £3 million loan, which brings on new institutional investors. Phillip Day is the Chief Executive of Scotgold. Phil, good to talk to you. Thanks indeed for your time. Clearly a really big day for the company. Before we get to that debt funding, which is clearly going to be good news for the business from here on in, let's get some background leading to just where we are. Update us on what the company's been doing last year. And of course, last year we also saw you come on to the board. So explain where Scotgold Resources is.
Okay, so yes, I commenced in April of 2021, took over the reins from there and joined the board immediately in the CEO and managing director role. I was given the task to take over from where the commissioning / construction was at the time and take it forth into operations as quickly and as smartly as possible. So did a lot of work for all the way through the summer and into the winter. And by the time we got to the end of the year, we were happy to release that we had 3 months of sustained operations above our operating costs, and we were so by the time we ended the December quarter or the fourth quarter of 2021. Then we went straight into 2022. And I'm about to release our operating results next week to explain to people where we're at.
Yeah, and of course, this is all based around the Cononish mine, isn't it? My understanding is, according to recent statements from the company, it's extremely high-grade margin mine. Explain more about the mine, what it's doing, and how you're going to get to this 23,500 ounces a year.
Sure. So in the first year, like I just said, it was more about trying to get all the surface facilities operating, so the process plant to become efficient, to consume all the material that was coming out of the mine. But the mine itself is a wonderfully high-grade mine. It is a reserve grade of 11.8, 11.9 grams per tonne, so near enough to 12 grams. So that is a very high-grade gold in comparison to others around the world. But our job for 2021, or the back end of 2021 and into 2022, is to get as much access to what they call stopes, which are the higher grade areas that you typically mine, and you get large volumes and high grade material coming through that you can then have processed through your processing plant. So if it makes sense, the processing plant needed to be running in firstly, and it had to be ready to accept it. And in 2022, the business is to get access to these high-grade areas and high-grade stopes, of which we did hit in the late part of March of this year.
Just wanted to catch up as well about how the mine has been developing, because we saw that record high gold price, of course, a couple of years ago, just around the time of the major lockdowns on COVID, when it went over $2,000 an ounce. How profitable is the mine? What are your all-in cash costs here per ounce? Because quite often when you get mines in certainly Western developed economies, the cost base is quite high, and mines just aren't economic until you get to a certain level of gold price. Is that the case with this particular mine you're at the moment?
So ours is because it's a ramping up asset or a ramping up mine. It's very difficult to claim what your true operating costs are through the ramp up period. But once you achieve the full run rate, we believe firmly that we're going to be in the 500 areas AISC all in sustained cost per ounce. And so if gold price sits at 2,000 and we're producing in 500, well, it's obviously quite a healthy profit margin. But the name of the game for us is to power through the ramp up and get through to the 23,500 ounces run rate as fast as possible. But we won't be achieving that until Q1 of 2023.
Yeah, and of course, part of all this is this funding that you are. In fact, you're in Zug at the moment in Switzerland, I know, because of this deal that was announced this morning. This £3 million loan organised through Fern Wealth in Zug. My understanding is going to bring in some new institutional investors into the company. What does this do? You're talking about a transformational year in 2021. Presumably, this is a pretty transformational deal for the company, isn't it, as well?
Oh, absolutely. This is another transformation year. So 2021 was a pure get in and get the operations to work, but 2022 is all about growth. It is quite easy for us to understand where our growth needs to be. It needs to be in high throughputs through the processing plant. It needs to be through optimization into the mine, and then going through and getting into an ore sorter or an expansion of the processing plant and mine itself. So we needed money and funds in order to be able to progress that. So that this is definitely a transformation for us. It gets us from where we are now, which we call the original phase one, and pushes us up into phase two and allows us to do all the pre-purchasing and all the work that we need to do, like engineering work and the likes, and get us up there by Q1. So as you say, it is a transformational deal. It's extremely important for us to be able to get, and we're very, very lucky. And now it's going to be back onto us to deliver exactly like we did in 2021, but through to this new 23,500 ounces by 2023. Like I said, once we get to there, we believe our cash costs will be what they are. We'll be quoted in the 500 region. So we'll be an extremely profitable mine at that point.
Phil, let's bring up a share price chart, because I think it's an interesting point to look at where the company is and what's happening. And this £3 million has come on to the balance sheet and these investors in the business. Just explain what's built into the share price here. And again, going back to how much of a difference this £3 million will make.
Okay, sure. So as you can see, the share price has been quite lumpy. It's had a few times where it's been in the pound region, where there was an expectation that the Cononish mine would have been brought on and would have ramped up exceptionally fast. Obviously, there was some teething issues in and around the first quarter of 2021, which is why I was brought in. And we steadily went around and got a lot of those issues resolved. So by the time we got to the end of Q4 of 2021, the asset was running near at phase one operations. It was obvious that the mine still had to be doing more development to get more access to more and more stopes and the like. So I think what the share price is saying is that it has this natural tendency to be one pound plus. We've had research notes saying it should be in the £1.50 plus. But it's all on us to just get steady operations and continue steady operations, I should say, what we're doing now, and make sure it's solid and all banked in, and then push forward into this phase two operation part. Everything now sits on that, and that's what I was saying before. We're extremely lucky to have had this debt people to have so much faith in us to provide money to allow us to unlock our asset now and allow us to truly get us from phase one straight up to phase two as quick and as efficiently as possible. And then once we're up there, I've quoted what I think the cash cost will be, in the 500 with gold stays of 2,000. Well, we'll be making quite a lot of nice, healthy returns. And I think probably we'll be unlocking our share price to go back into the £1.50, as the research notes has all clearly indicated.
Of course, all part of this is how the company is put together and sort of costs along the way. We know that inflation is very much in view at the moment, and obviously costs are going up, energy and of course staff costs and so forth. It is being based in Scotland, of course. You have Western costs involved in all that. What about the ESG credentials of the business, and what are you doing to try and mitigate some of those costs, especially in the energy part of the business?
Sure. So in the energy part, our final part for ESG is to connect up to the grid itself. Scotland has a lot of its power being generated, obviously, through water and wind turbines. So we want to connect up to that. Once we have established that, then we will be literally looking at our light vehicle fleet and our underground fleet to go to batteries, if that's possible. And then once we get to that point, then I think we're about as green as it's possible, because we've already built the processing plant and the mine to be as ESG friendly as possible. We are obviously operating within the national parks, so we are held to a standard that is significantly higher than other mines are in the world. We use dry stack tailings, so we do not have tailings dams, impoundments. We don't have any of those sorts of risks that a lot of other mines have in the world, which I saw a couple of failures down in Brazil as an example. So we don't have that risk. We make sure that we also don't interrupt negatively the impact that people have and the walkers have within the Scottish Highlands. So as you can imagine, the level that we're held to is just repeating. It's so much higher. So we take that very, very seriously. and hopefully, if we can get connected to the grid, get onto wind turbines and or power, so hydropower, it will just completely lock it all the way to say that we are the ESG. What would you say? We are the front lines for ESG, I should say.
Yeah, just want to pick up on one other aspect of that. Sometimes we see modern ways of getting gold out of the ground, including the use of cyanide and so forth. Can you confirm that that's not used on this site?
Yeah, so we do not use any dangerous, harmful chemicals in our processing. So our processing is very similar, very simple, I should say. It's either through gravity gold, which is just pure mechanical separation, and or flotation, and we send that gold off for treatment in other places. So we use no cyanides, we don't use any dangerous chemicals, and every single chemical that we use, if it is used, we have to have had pure and utter approval through the parks, the national parks of Scotland.
Just one final question. How's the rest of this year looking? We've already touched on the fact you've got this target of 23,500 ounces by Q1 2023. What other sort of headlines should we be watching out for this year as we see the company continue towards that goal?
Right. So the big headline that everybody should be waiting for is with this establishment of what's called stoping. Stoping is an underground particular mining technique that once you've established that, the amount of material that you can get out at the grades that you want it dramatically shifts. We believe we'll be doing stoping in Q3 to Q4 of this year. So all work is to develop and develop and develop in the underground mine to be able to establish that point. So all investors should be watching out to hear from me. We are starting to stope, because as soon as we get there, that's when we will be into very high grade gold and selectively picking the gold that we like, the grade, I should say, and then processing it through our reliable processing plant.
Well, look, Phil, it's a pleasure to catch up with you. Clearly, a good day for Scotgold Resources with the signing of that debt procurement. Good luck with the rest of the year. We're looking forward to catching up with you later on if we possibly can. That's Phillip Day. He is Chief Executive of Scotgold Resources. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.